Hey folks, Dan Frio here, the rate update. It is Federal Reserve alert time, and it is an alert this time, so don't go away. We'll be right back.
Rates were unchanged in the statement here, but the Fed said that if economic progress continues, reducing asset purchases may soon be warranted. I'll give you the exact language on that in just a second. The sectors affected by the pandemic, the Federal Reserve said, have improved in recent months, but the rise of COVID cases have slowed the recovery. And whoever, I think it was David Kelly, said it was right. They did lower the forecast for 2021 GDP. Back to that in a second. Decision was unanimous. Now, the median forecast now calls for a rate hike in 2022. 9 rate hikes were called for in 2022, 3 of which actually call for 2 rate hikes. The funds rate seen hitting 1.8% in 2024, so quite a bit of work to do. Unemployment rate is forecast, the median is slightly higher, 4.8% instead of 4.5, and a few other things. Somebody was talking about inflation there. They did pull up the inflation forecast, or at least the median forecast of all 18 members, to 4.2 from 3.4. It remains above 2%, interestingly, through 2024. This is our first look at 2024. And GDP was indeed pulled down. I'll give you that number there, 5.9% from 7%. So they took 1.1% off of the GDP forecast for this year. And next year, actually, they put a little bit back, about a half a point, 3.8%. So they're still seeing above trend growth through 2023. So I don't know what you want to call this. The pre-warning of a taper is the way you'd want to put it. They kind of put it in there. The exact language I will give you here. Let me just offer you that, what they exactly said there on tapering. And it was, if progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. So maybe it's time to think about putting on your seatbelt eventually for when the Fed eventually announces sometime in the future that it will taper.
So just based off of that, it doesn't look like it would be that scary. It's like, oh, okay, you're going to raise rates at the end of next year, and you're going to start tapering, and it's not going to take effect or totally go through the system for at least till the middle of next year. But how are we faring on the MBS market? That's what we're really concerned about. Not good. Okay, so here's what's happening today, guys. We had a nice rally into the market. We were up at one point about 16, and then Federal Chairman Powell spoke, and the markets didn't like it. Now we're down 22, so a 40-point move, 40 basis points. That is going to affect rates. It's getting pushed through all the banking systems right now, that all the banks, if you haven't locked in your mortgage right now, you probably should have done that. We locked in everybody basically last night or this morning, especially this morning when we were up 17 at one point. I'm like, I can see us going up 20 or down 20 or 30 if this happens. We already picked up 17 of the 20. I was comfortable with that. Didn't think there was much more rally left in the system. And then what came in next was the opposite of what I thought. And I called it. I said, we're going to be down probably at least 30 if the markets don't like it, and they're not liking it. So that's it for right now. I just thought I'd post a quick video for you guys to let you know what the markets are doing in reflection of the Federal Reserve chairman speaking. And then later today, I will be posting what happened with mortgage rates. And I got some hopefully some good news for you guys on how much you can afford with these crazy home prices out there right now. So check back again around 5 o'clock. I'll have a rates update for today and a special feature in regards to how much home you can afford. God bless, guys. Thanks again for watching. See you later.